was. It could have easily been toxic. It could have been poisonous. It could have been a smoke bomb, or it could have been a tear gas. It could have been anything. So this is a serious breach of security, and especially it's happening on the 13th of December, the anniversary of the Parliament attack. We should not forget that. And it's surprising that the two people were able to bring canisters into the visitors gallery of the Parliament, because the Parliament, to come into the Parliament gallery, you need the signature of a particular MP, and you also need their ID. So it's not as if unknown people can come there. In spite of this, and there is a strict screening before people come there, they're not even allowed to bring their mobile phones. It's very surprising how they have brought in two canisters. It's a serious security breach, and the Speaker, who is the custodian of the House, must constitute an immediate inquiry, apprehend all those people who were involved in it, and see where the breaches were.
So what has happened now to these? Have they been arrested?
They were obviously overpowered and taken. They were obviously overpowered and taken into custody, but I do not know what happens. You must ask the Speaker, because he's the custodian of the House. But the fact that two people could come into the visitors gallery and carry canisters which can emit smoke, this smoke could have been anything. These fumes could have been poisonous. I'm not saying they are poisonous. They could have had the potential of being poisonous. If they had been poisonous, the fallout would have been terrible. The House was with many members. This would have had especially happening on the 13th of December, is sending out a very bad signal, and it is also sending a signal that our security is not tight.
So you want a high-level investigation?
Of course, we want a high-level inquiry, and it must be tabled in the House, and the Speaker must constitute it.
Right. So as far as markets are concerned, at the moment, of course, they've come off from day's lows. At the moment, they are flat, marginally in the red when it comes to the Nifty. Not too much to speak for otherwise, but there has been a substantial recovery from day's lows. Talking about the Bank Nifty as well, there has been a little bit of an upswing over the last 10 to 15 odd minutes, and since then we have seen a little bit of consolidation. But the positive is that the Bank Nifty at the moment has been able to defend the 47,000 mark and is currently trading above that. The question really is that can we in fact expect the Bank Nifty to expire above 47,000 today? But and as far as your broader market indices go, which would include something like a mid-cap index along with a small-cap index, they're also up and about. The mid-cap index, of course, outperforming the benchmarks, and as is the case for the small-cap index, which is also up by around 0.4 percentage point. From there on, we move on to the large trades of the day, and we take up Tanla Platforms. Now, this is buzzing in trade. At one point in time, it was up nearly 20%, and our colleague Mahima is joining us to give us an update on the same. Mahima, good afternoon. Let's start off with the details with respect to volumes at the moment. And while we are not certain as to what this reason could be behind this up move, could you at least give us an idea about what a lot of the street is saying with respect to Tanla?
Right. So as you rightly said, the stock has zoomed 20% in intraday trade today. The share had hit a 52-week low on 28th March. If you can, if we see in 2023 at 493, and since then, if we see the today's performance of the stock, it has recovered approximately 125%, which is a huge uptick. The stock is, however, still a lot away from its 52-week high. And last, if we see, the stock had hit 20% intraday high on 9th of December in 2016. So it's been a long time since the stock has gained so much. And talking about the volumes, we don't know, as you rightly said, who the buyers and sellers are at present. However, the volumes are trading at 35 times its 30-day average. And if we talk about Tanla as a whole, Tanla is basically a leading communication provider, and they have acquired Value First Post, and after which its market share for communication platform as a service has grown to 35% from 30%. It is also a market leader in SMS national long distance market, where it holds a 45% share. The pricing of NLD is a lot cheaper than channels like WhatsApp and Truecaller. And if we talk about the Q2 FY24 performance for Tanla, the revenues grew by 19%, where digital platform revenue grew by 27%, and the enterprise communication platform grew by 18%, and EBITDA has grown over 41%. So overall, if you see, the Q2 performance show strong numbers. However, again, like I mentioned before, the buyers and sellers are not known yet, but it's a buzzing stock in volume today.
Absolutely. Well, thank you so much for getting us those updates on Mahima. And I reckon that perhaps, well, a few hours to a day down the line, we can also maybe decipher who the interested parties were and maybe also the reason why we are looking at the sharp surge in Tanla Platforms. But from one buzzing stock to another, we have Nazara Tech, which is also in focus, and this also has made a substantial move on the upside. And now we have Varsha, who's joining us to give us more details on this matter. Varsha, what do you make of these moves, and what could the potential reasons be?
So if you see Nazara, the stock has hit intraday high of 8% and the stock is up 36% in last 1 year. The volumes were 6 times its 20-day average. Now let's look at the fundamental aspects of this business. Despite ongoing challenges in ad tech because of loss of their client, then Kidopia because of stagnant subscriber base, and real money gaming where GST levy of 28% is there. So company is expecting strong traction in their sports Kira, which is likely to drive sales, and also given higher GST rate which we have spoken about, the classic Rummy is expected to post an EBITDA loss in third quarter versus is expected to achieve break even by fourth quarter. Now if you see, an ad tech company has been focusing on reducing low margin work and moving towards the high margin business clients. So a lot of good positive attraction is, fundamentally if you see, a lot of growth prospects is expected to this business, and the H2 FY24 will show higher revenue as compared to H1 FY24.
Right, Varsha, thank you for getting us those updates. So that's as far as Nazara is concerned. And of course, both these companies from the tech/gaming space are doing well. But on that note, we slip into a short break, but don't go anywhere. Lots more lined up. Stay tuned to NDTV Profit. Welcome back to Large Trades. Now, we've been talking about banks a lot, specifically today, because a lot of them were also in focus on account of news. And one of them, of course, is Indian Bank. Now, we're going to get in Hemash to talk to us about that one because we've certainly seen, a QIP there, but I'm going to wait for Hemash to give us more details. Hemash, what can you tell us about this one?
Hey, thanks, Agam. So, Indian Bank is in focus now on the back of their 4,000 crore QIP that was opened as of yesterday, and the floor price was set at 414 rupees, which as of this morning was at a discount of 5% to their previous close on yesterday. And this is interesting because the last QIP undertaken by the bank was back in March 2021, where they raised funds in several tranches, the first one being for 1,650 odd crores, and this one comes in much after that now. Last month, the bank was in news after it wound down its housing arm subsidiary, and if we go to see what are the prime reasons for this QIP, it's mainly to bolster its tier 1 capital base, which as of September ended quarter stood at around 12% odd. So the tier 1 capital, which essentially helps the bank in boosting its portfolio, expanding its reach, as well as investing in technology and distribution, is the main idea here at play. In terms of Q2 results, the bank saw a margin contraction with about 10 basis points coming down to 3.46%. The net interest income growth was flat on year and it stood at around 5,741. Provision coverage ratios and gross and net NPA ratios have seen a significant improvement over the past year, and they've declined by almost 3 to 4 percentage points, as well as the PCR, which now stands at 95%. So the Indian bank has been recovering from its previous relatively not as good times, but yeah, it's a bank that's on its track for improvement.
Right. Fair enough. Himansh, thanks for getting us those updates. So, it certainly does look like a whole host of these public sector banks are starting to pull their socks up and get their act together. And of course, in this case, Indian Bank is not very different. But from that large trade, we move on to another. And this one is Vaibhav Global, where we understand a substantial chunk has exchanged hands. And for that, let's get in Mihika to give us more details. Mihika, another very interesting name. It's not exactly trading at life highs, but we're certainly seeing a surge here as well.
Yes. There was a large trade at 9:30 in the morning, just at the start of the day. 4.09 lakh shares changed hands, and this is around 0.3% equity of the company, and they were traded at a price of 398.7 crores. Now, the volumes are at around 9 times the 30-day average. The total volumes of the day stand at 32.61 lakhs, and the highest volumes were at the price of 405 rupees. Now, intraday high, in terms of stock performance, the stock did go to an intraday high of around 8.44%, and it's also which is the most in 6 weeks, and it's also up 21.68% in the past year. The company has had a strong Q2 performance. Back in September, they witnessed a revenue growth of around 9.1% on a year-on-year basis. The EBITDA margins also stood at 9.5% in Q2 versus 8.1% a year ago, and this was mainly on the back of better pricing. And lastly, when you look at the valuations, currently Vaibhav Global has a price to earnings ratio of 64.15, and then when you look at the peers, which are a little higher in market capitalization, a Titan or a Kalyan Jewellers or even a Rajesh Exports, Vaibhav Global stands lower than Titan and Kalyan Jewellers, and Rajesh Export is the least expensive stock at 7.21.
Right, Mihika, thank you so much for getting us those updates. Of course, we have to remember that when it comes to Vaibhav Global, their business model is slightly different from perhaps likes of Titan as well as Kalyan Jewellers. And of course, Rajesh Exports, while being in the gold sector, it is completely differently operated. That said, we certainly can make those comparisons. And of course, Vaibhav Global clearly at a discount compared to its peers that Mihika has spoken about. And from there on, we move on to the real estate pack, particularly Sunteck Realty. And this is where we have also seen some amount of weakness seeping in. This is after 60 lakh shares changed hands. And on that note, we're going to get in Anushi Vakharia, who's going to give us more details. Anushi.
Quite some selling pressure in Sunteck Realty today after the huge block trade, wherein the 59.5 lakh shares changed hands, representing about 4.1% equity. So this happened at a price of rupees 484, which is at a discount of about 3% compared to its yesterday's closing price. Now, if you look at the intraday stock performance, it was down about 8%, which is the highest fall it has seen in its last 3 years. if you look at the volumes, that traded at about 8 times compared to its 30-day average. To get more clarity on the buyers and sellers that could be involved in this deal, let's look at the promoters who hold about 67% stake. And if we move to non-promoter side, we have the likes of LIC holding about 4% stake, and in the foreign funds we have Pabrai Investment Funds and BW South Asia holding about 6% and 4% respectively. So yes, that was the block trade that happened. Now, if we look at the fundamental side, an interesting note from MOFSL Motilal came out, wherein they expect the pre-sales of this company to post about 25% CAGR growth in the FY23 to 26% compared to the 22% growth the company has posted in the last 5 years. Also, what they are betting is on the recent partnership with IFC to drive further growth, so we should definitely keep a watch on that. So just to wrap things up, I'll conclude with the stock performance, which has seen about 66% gain in the past 6 months compared to about 37% year-to-date returns. So this would be in context with the Nifty Realty also performing well.
And on that note, we take another break, but don't go anywhere. Keep watching NDTV Profit. Welcome back. Well, as far as the Nifty is concerned, we're not seeing too much traction there. And while we have seen a little bit of a U-shaped recovery through the course of the day, that has panned out for the Bank Nifty as well. And coming down to your broader market indices, something like a mid-cap and a small-cap index, that is in fact outperforming the benchmarks. The mid-cap index is up by as much as nearly 0.5%. It's the same for the small-cap index too. And speaking of the markets and staying there, Morgan Stanley is very bullish on Indian markets. The firm expects political continuity in the 2024 general elections, and they have also projected a 14% upside to the Sensex. My colleague Neeraj Shah brings us all the details about what Morgan Stanley has to say. Listen in.
You have to argue that Ridham Desai and team got it right when they turned constructive about few months back. That has paid off well. Now they've come out with an Outlook 2024 report. And it's interesting, a few takeaways. He starts off by saying that it's hard to argue against India's investment case. That's the key point. Even if you wish to, you cannot make an argument against India investment case. And the strong earnings, macro stability, and domestic flows. You know, it's amazing that every note now talks about how domestic flows are a key pillar which will aid the market momentum almost every single year, and Morgan Stanley is no different there. Now, what are the key takeaways for 2024? According to them, the long-term story is gaining strength, and India is the key pick in the EM and the Asia-Pacific basket. It's a base case looks for improving absolute returns and outperformance to the emerging market pack. And they say general elections, amongst other events, point to a bit of higher volatility when it comes to India. So that is probably the one thing, that volatility may be higher, but otherwise things look promising. Now the base case for markets, they say they expect equities to rise in 2024 general elections as the market, in the lead up to the general elections, as the market is likely to price in continuity and a majority government. They believe there is a 14% upside to the BSE Sensex up to December 2024 as the base case. Now, you remember, viewers, yesterday we had BofA come in and talk about how the risk reward is skewed in favor of gains, and they believe there's a 15% upside. So there's a bit of a consensus out here from large global brokerages about what the Nifty could do in 2024. The thing is, everybody seems to be biased towards large caps as opposed to mid caps. So when it comes to Morgan Stanley, they are saying they prefer cyclicals over defensives. So you would see a bunch of those LNTs. I don't know if metals come into play here, but largely people stay away from metals because they are globally exposed. But local domestic cyclicals and cap goods come into play out there. Real estate comes into play. So that's the set of stocks that people are preferring as opposed to defensives. Read staples, and large caps over the SMIDs is what Morgan Stanley is saying, and this shouldn't surprise anybody as well, which is why in fact we've such a sharp focus on the SMID show. And lastly, they are overweight financials, consumer discretionary, industrials and technology. They say they are underweight every other sector. Just before I wrap up this piece, the other interesting thing that they are saying, that the key drivers for a structural bull market for India include macro stability, secular positive BOP. So that is part one. And a lot of people are penciling that focus on the balance of payment situation improving in India. Secondly, they say that strong relative and absolute growth for India. So not just in absolute terms, but even in relative terms, it is so much better than any of the other economies, large economies, which may be growing. Reliable domestic sources of capital. India's 401k moment. So everybody's talking about that as the third piece. And two more drivers that people talk about: social equity, and lastly, consumption boom. We haven't quite seen the consumption boom come into play as yet, at least at the rural side. Maybe that comes to the fore in 2024. So that'll be interesting to see. But net, much like BofA Securities, Morgan Stanley too constructive with about a 15% at the start of the year. And by the way, 15% on large caps is not a bad play if we believe that the markets, that will keep the market steady, and then therefore individual stock specific stories will keep on buzzing.
And with that, it's a wrap on large trades, but stay tuned for India markets close on the other side of this break.
All right, thanks for tuning into India Market Close right here on NDTV Profit, and the markets have recovered. So this is actually deceptive because this will make you feel that it's been a flat day. It's been anything but a flat day. No major changes. But if you can have the intraday of the Nifty first before I get to the heat map, because that will show you a very interesting picture on the screen. There has been a gyration right here. As you can see, the day's high is 20936, low was 769. We are currently at 2881. We started off okay, then came off quite a bit here at the low point of the day, and since then have recovered fairly well, I would say. So it's not been a bad last 40-45 minutes of trade.